Give us your response, your thoughts on Kevin Hassett as the next potential Fed chair.
Yeah, well, I mean, I think he's seen by markets as the candidate that is closest to the administration in terms of their views on interest rates, and that is, it's clearly more dovish than the central, the consensus on the committee right now. Just in terms of the outlook for him, it's no guarantee that Powell will step down from the board when his chairmanship ends in May. So we think the administration will probably want to install whoever they want to be their next Fed chair when Steve Myron's, kind of short stub seat ends in January. So we think that they will try to do that. If they want Kevin Hassett, genuinely to be the next chair, he could be installed as soon as when the Myron seat expires. But when he gets on the committee, there's still a big question on, can he convince the other members of the FOMC in his views and to lower interest rates, if that is indeed his views. So, the committee is a democratic process, and he will have to have some intellectual heft in terms of convincing the others on the committee, if he wants to make material adjustments to the Fed funds rate.
I think it's fair to say, Tiffany, that markets like Federal Reserve and central bank independence, regardless of where we're talking about around the world, I'm wondering about the delicate dance that Scott Bessent, the Treasury Secretary, and that President Trump have to do to pick somebody who is respected by markets and viewed as independent, but also viewed by the president as somebody who will put his policies into action. Because I would imagine if somebody is chosen who might lower interest rates in an environment where interest rates really shouldn't be lowered, we would see some serious pushback when it came to the bond market.
Yeah, I mean, I think one of the other stated goals of this administration, and Scott Bessent in particular, is to just to ensure that all interest rates are moving lower. They do see it as a constraint on the economy, and they've all talked about not only just the Fed funds rate, but overall interest rates moving lower. I do think there's a question around if that goal would be achieved if you had a chair and an FOMC that was reducing interest rates at a level that got the markets concerned about inflation risks and about kind of longer term credibility questions. And in that environment, it's certainly possible that even though the Fed funds rate could be falling and shorter dated Treasury yields could be falling, the longer end could actually be rising as the markets are pricing in more term premium and more risk associated with that sort of credibility, those credibility questions. So it's no guarantee that reducing the funds rate will reduce long end yields. So I think that the administration certainly has to be cognizant of that as well.